Good morning, everybody. Shane here from the Brookings Home Team, powered by Century 21. Monday morning, 8:15. That means it's Monday Morning Mortgage Tip. And this morning, I am graciously sitting next to, is it graciously? I don't know. I have the honor of sitting next to Barb here from BankStar, and we'll just jump right into it. Barb, thanks again this morning for jumping here with us. And
you bet.
What do you have for our tip today?
Lately, I've had a lot of people ask me, can't they just pre-approve themselves? Like they don't want to take time to go to the bank, and it shouldn't be all that hard. It's just a math problem. So I'd like to kind of run you through it just real quickly. If you want to get super simple, what we're really looking for is that the house payment, so that includes taxes and insurance, maybe you'd have some mortgage insurance, maybe you belong to a homeowners association at the house that you're looking at, those kinds of things. All the things about the house would be about 1/3 of your income for each month. So if you look at your pay stub and you find your gross, because we work off gross before they take the taxes and everything out of it, about 1/3 of that is going to do it. The technical answer is 28 to 29%, but you can see that's about 1/3, so that'll get you there. That sounds way too simple to come to the bank for, but then there's a whole bunch of ifs and ands and buts and all of those technicalities on how that gets calculated are where you need a professional. Some examples would be if you change jobs, or you've just come back to the workplace after an absence, or if you do any kind of self-employment, that's going to have an effect on your income. And most people go, well, it could only be better, right? Well, as an example, if you have a hobby farm, or if you sew pillows and sell them to people at the fair, and you take that as the expenses as a deduction on your tax returns, and you take everything you can to reduce your taxes, that might be a negative bottom number for that little business. And when it is, then that goes from being making money to losing money in the bank's way of figuring things out. So instead of adding to your monthly amount you can spend on your house payment, it actually takes away from it. So if you have anything complicated like that, it's good to go talk to a professional. The next thing that people always ask me about is they heard you don't need a down payment. And that's true for some people and not for some other people. So you have to kind of figure out some programs here and see what you're eligible for. Veterans, whether they were veterans in World War II or they're currently in the National Guard, any kind of veterans may be eligible for 100% financing. There are some people who could use the first-time homebuyers program, and they have some that are available for 100% financing. So you kind of need to go through these numbers with, again, a lender to make sure that you know if you can do 100% financing. If you can't, though, a lot of people bounce right to, oh no, I have to save up 20%, and that's a ton of money. I don't know how I'm going to do that. And the truth is there are quite a few programs that are for 3 or 5% down. When you're looking at a $100,000 house, 5% is just $5,000. So then that doesn't sound so bad as 20% down. When you have those lower down payments, you'll have some mortgage insurance, and that goes in the calculation of how much house payment can you afford. But you're still, even if you get 100% financing, you're still going to need some money for your closing costs. So people wonder what those are. The first part, of course, is that down payment if you have one. So we've got to save some for that. And then the bank has some fees for working through your process. In our area, it's most typically 1% of your loan amount. So not your purchase price, how much you're borrowing. And then you'll have homeowners insurance. And you get to go choose your agent just like you chose your realtor and your banker. After that, it's all third-party fees, and the bank needs to order these, and they're things like your appraisal and your title insurance, and finding out if you're in the flood zone or not, maybe doing a survey to make sure the house is all on the land or the lot that was described with it. So there's a lot of things going on, a lot of moving parts that you could stub your toe on here, and that's why it's good to get to a trained person to help you with this. Any bank or any lender that you go go to, it's going to have these little green booklets. It's called a toolkit. The Consumer Financial Protection Bureau put those out, and it has all the math in there for you. It warns you that there still could be some oddities on each person's situation, and that's what we're for. So if you get a chance, it's worth the time for a lot of reasons to go sit down with the banker for an hour before you decide to go looking at houses, so you get in the right price range and you don't get disappointed once you're ready to make that offer on the one you love.
Wow, a lot of good information. You bet. Yeah, it's not as simple as saying, hey, I make X amount and I have X amount in liabilities.
Right.
I'm approved. Not so much. So plus, like you said, you got there could be some really great options for programs that you might not even know about that you could qualify for. So which would help with that as well. So. All right, Barb, thank you. Great information today. So if you have any questions for Barb, feel free to reach out to her. Again, her information is on top, on the bottom, or on the sides, wherever your device allows you to see that. And if you do have questions for any of us here going forward, feel free to let us know, and we'd be happy to answer that on the next episode. And please... Sorry. Please share or tag this video with anybody else you think would be interested in it as well. So thanks again for watching this Monday Morning Mortgage Tip. We'll be back next Monday for some new information for you guys. Thank you.